Another day, another problem for Washington. And one more thing to remember, that here decisions don't often stay here. History shows that taking away a leader seldom reconciles the forces that put him there. This week, as the Venezuela operation is now in its 5th day, something strange began going on in the oil markets, something that shows exactly why economic pressure campaigns so regularly go wrong. Chinese refiners stopped buying like Washington Venezuelan crude hoped, but they kept buying allowed oil. They changed who they bought from Iran to Venezuela. And by doing this, they show the main difficulty with approach based on sanctions. Politics don't matter to capital. It is concerned about margins. And when you break one supply chain, the market just builds another. I'm going today to show you what really is going on in the oil trade throughout the world right now. Nor the political theater, nor the press. Conferences, how they work. Caracas was put under a lot of pressure making Throner. This isn't just about Venezuela. Not anymore. This is about whether the U.S., the economy, can change the way markets work, or whether markets will shape themselves faster than Washington can take charge of them. Let me show you what's going on. Let's begin by talking about what the operation was, what it was meant to do. The general public, the story was apparent. Maduro was a criminal, a Narat terrorist, and a dictator who needs to be taken out. The United States would bring back democracy, make the area stable and safe. Venezuelan oil for markets that are friendly, but the real audience for this maneuver wasn't in Caracas. It was in Beijing, because Venezuela wasn't just about Venezuela. It was about not letting China in. Access to energy in the Western Hemisphere. It was about keeping the dollar on top in the price of oil. It was about showing that the U.S. still has the ability to change markets through pressure. The battlefield was Venezuela. China was the objective. And China replied not with force, not with dangers to diplomacy, with economics. Chinese buyers just sent back. They identified other option suppliers. They changed their supplier chains, and they did it faster than the U.S. What policymakers thought would happen. We need to grasp this pattern, because it's not just in Venezuela. It's how contemporary economic competitiveness truly works. Why not let Venezuela go? Why double down with blockades taking over tankers and fights with Russia? Because Venezuela constituted a test case for if U.S. sanctions still work, if Venezuela's pressure doesn't work, if the administration stays in power, as long as oil keeps, if China keeps access, the flow will continue. Then the trustworthiness of America and the economy falls apart. And if the credibility of sanctions falls apart, then Iran, Russia, and China all get bigger, skips the dollar, every enemy, and the same lesson is learned by every contestant. You can stand up to U.S. pressure and live. So Venezuela is more than just oil. It's about the whole structure of the influence of America. It's about if the United States can still change by economic means, it can make other countries do what it wants, force. And right now, the solution isn't clear since Maduro is in jail. Yet, the blockade stops certain supplies and U.S. troops take tankers. The oil trade is changing. The market is figuring out how around pressure from the U.S. and adaptation is what matters in terms of strategy when sanctions shift money instead of power. This is where the narrative gets good. Chinese independent refiners, called in business slang teapots, are big people who buy cheap oil that is legal. They work with very little money. They need cheap crude to stay in business. Venezuelan oil was great for years for them. Deeply heavy crude, discounted, delivered on time, every time. Sanctions through a web of dark tankers for the fleet. Based on Kepler data, China brought in 389,000 Venezuelan oil in barrels per day 2025. That's around 4% of all the ships that come to China. Imports of crude. Not a big part of it, but necessary for strategy because the heavy, high sulfur grade Venezuelan MAR, crude Venezuela makes sulfur grade that can give up to 60% asphalt during refining. That's really important for China projects to build roads and bridges. The U.S. blockade got tighter after that. There were more tanker seizures. loadings for Asia at Venezuela's key ports. After January, ports halted completely. First, what did Chinese refiners do then? They kept buying oil that was banned. They didn't raise costs for things that weren't allowed other options. They changed vendors from Venezuela to Iran. Sparta Commodities says, expert says the Venezuela drama hits the independent refineries in China hardest since they might not be able to get to hefty barrels on sale. But as there is a lot of Russian and Iranian feedstocks on hand and barrels from Venezuela, we don't see the teapots on the lake having to bid up for things that aren't allowed barrels since the economy would probably not make sense for them. Zumuyu, a senior analyst at Kepler, said that teapots are processing oil from Venezuela are likely to mostly switch to Russian and Iranian grades in March and April. Heavy crude from Iran is still the cheapest. Alternative trading at lower prices of around $10 a barrel for Brent. Same discount, same kind of heavy crude, but different provider. This is the most important thing to know. Money doesn't care about politics. It cares about the edges. Chinese refineries need heavy, inexpensive crude to stay profitable. If they can't obtain it they'll receive it from Iran, not Venezuela. If they can't obtain it from Iran, they'll get from Russia. The source doesn't. The money does. This is the contradiction of sanctions. U.S. pressure didn't stop the trade. It sent it somewhere else. Now, let's speak about why this is so failure of strategy. When there are sanctions on in late 2020, Venezuela's sanctions were momentarily lifted. In 2023 and early 2024, something took place. Oil from Venezuela prices went up. The discount got smaller. It went from $15 less than Brent per barrel to around $10 less per barrel than Brent. That made Venezuelan crude less appealing to people from China who buy the financial benefit got smaller. Iran, on the other hand, kept its oil, even after the U.S. put complete sanctions on it at very low prices. Heavy in Iran, crude oil held at $10 per barrel below Brent. Iranian super heavy was even less expensive. So when the U.S. put pressure on Venezuela, got worse again as the when seizures happened, the barrier got tighter. Chinese buyers glanced at the prices that had gone up, looked at the numbers, and made a smart choice. Venezuelan oil is dangerous and could be not available $10 off. Iranian oil is banned but flowing smoothly. Same $10 off, lots of supplies. It was clear what to do. The U.S. tried to punish Caracas. It unintentionally gave money to Thrawn because sanctions didn't cut off. They mixed up the market. And the benefactor was not an ally of the United States. It wasn't an impartial party. It was Iran. This is the economic backfire that policymakers either didn't see it coming or didn't care about because the focus was on getting rid of Maduro, not on what happens to the flow of oil around the world once he's gone. And this is what occurred. Iran's market, China's share is rising. Venezuela's is falling apart because of U.S. sanctions policy made it happen. Now, this is where this becomes much more of a problem because the money Iran makes from oil doesn't only go to infrastructure and refineries. It pays for the Islamic Revolutionary Guard Corps. It gives money to proxy forces all over the Middle East. It pays for drones and rockets, the same drones that the U.S. Navy ships are now stopping in the Red Sea. The identical rockets are aimed at shipping routes, the same networks of proxies making Iraq, Syria, Yemen, and Lebanon. When Iran's oil exports go up, when payments change to UN barter and gold, when Thrawn gets more money that comes in from several sources, military strength, and the U.S. is now in the struggle for against in terms of military and economy, threatens that its own policy of sanctions helped pay for. This isn't guesswork. It's bookkeeping. More oil from Iran, more money equals more resources for the IRGC. More money for the IRGC means more missiles, drones, and ability. Washington is paying to stop weapons that its own policy helped pay for. This is the plan. How crazy the scenario is. The Venezuela operation was designed to make enemies weaker. Instead, it changed the flow of money in ways that made one of America's most angry opponents. And it doesn't look like anyone to be wondering if this was worth it. Why Trump can't let go of Venezuela? So why go on? Why stick with the strategy that's making these things happen? Because it's not an one option to confess failure. No, not tactically, but politically. If Trump backs off Venezuela, if he lets Maduro's successor to consolidate power, if the procedure goes well, flows will start again to China is thought to be missing, then the whole system of sanctions loses its credibility. Iran, Russia, and every other country observing North Korea and Cuba learn the same thing. Lesson. Hold out long enough and Washington will go on. So Venezuela isn't merely a test case for this. Management for the whole idea of economics pressure as a tactic of statecraft draft. If sanctions don't work on Venezuela, credibility falls apart. If sanctions, Iran expands as credibility falls, Russia gets bigger and China skips the dollar. That's why Trump can't let this go, because Venezuela isn't just about Venezuela no longer. It's about if the economy of the United States is still strong, and the proof is right now not really good. The change from catches to Thyren. Let's picture what's going on. The origins of oil have altered cash. The routes have changed. Power routes have changed. Before the surgery, oil from Venezuela went to China. Income stayed in Caracas. China had access to inexpensive heavy oil from the Western Hemisphere. Venezuelan oil, after the operation, disrupted Iranian oil and filled the gap. Money is suddenly coming into Thrawn. China still has access to cheap, heavy, rough, but from a different source. The United States thought it had caught the wells. The market took the clients. And here is the strategy issue. The U.S. can prohibit Venezuela. It can take over tankers. It can put pressure on people who buy, but it can't affect the basic economics. Refiners in China require inexpensive heavy oil. That need doesn't go away because the U.S. took it away. Maduro. It just gets happy when different vendors. So the operation accomplished a tactical goal. Maduro was in jail, but didn't pass the strategy test because the purpose was not to get rid of one person. It was to manage the flow of oil and keep an edge in the market. And that didn't happen. The flows changed. The market changed. And the winner was Iran. Let's talk about something now that didn't attract a lot of notice in the first coverage. Oil firms in the U.S. didn't hurry into Venezuela. Trump claimed that Chevron and other big American energy companies, ExxonMobil and other companies, would come in and put money into it, billions, fix up the infrastructure and bring production back to life. But that not happened. And it isn't occurring fast because businesses don't work based on promises made by politicians. They work on guarantees before putting billions of dollars into a country with an economy that has fallen apart and a broken government and a lack of stability. They need the law to protect them from future punishments, assurances of political stability, transparent ownership structures, contracts that can be enforced, insurance coverage, and access to money markets. There aren't any of those things in Venezuela at the moment. The government is going through a change. There is a lot of uncertainty in legal structures. Insurance companies won't pay for operations in a war zone. Banks won't pay for projects without political clear. So while Trump talks about American businesses are reconstructing Venezuela oil, the firms themselves are waiting, judging, watching to see what happens, stabilizes, because no business wants to put money into it in a bazaar that looks like a battle zone. Governments make promises. Businesses want things to be certain until, if there is certainty, the investment won't flow, which is Venezuelan oil. Production will still be messed up, which suggests that there will be a gap in Chinese supply continue, which means that Iranian oil will keep filling that space. This is the truth political rhetoric that causes tension in the world doesn't pay attention to. You can get rid of a government, yet you can't make private corporations do it. Put money into chaos and all of this economic reshuffling happens and the naval drama goes on. Seizures of tankers, Russian escorts, submarines near Ireland, U.S. troops following ships over the Atlantic. This is what sanctions are. This is what enforcement looks like now. Not only punishments by law and money, limitations, naval interceptions, fighting between armies. The line between military and economic pressure motion has gotten blurry, and every seizure and attempt can turn into a crisis. We talked about this in depth last time, but it's good to remember the Venezuela changing oil isn't the only thing that happens during operation. The markets, it's making trade more like war. Enforcement in ways that make things happen all the time risks. In the meanwhile, the regional response keeps getting stronger. Colombia sent troops to its border. President Pro stated that an attack on Venezuela is a threat to Latin America. Brazil, Mexico, Chile, Uruguay, and Spain made a joint statement of disapproval, not specific utterances. A coordinated answer. This is the expense of diplomacy. Countries that used to be friends with the U.S. policies, or at least stay neutral, are now actively fighting against what the U.S. is doing. And it's evident what they're trying to say. Sovereignty is important. One-sided interventions are not okay for regional security. We need regional agreement. This won't change Venezuela back operation, but it modifies the environment for what the U.S. will do in the future. It makes the following step harder. It lessens Washington's diplomatic being flexible. Latin America isn't taking sides between China and the U.S. It's making a choice. Freedom. And that freedom means less automatic support for the U.S. goals. The UN and Europe support without excitement. The European answer has been retained. Worry about things getting worse. Warnings about precedent. Stress on international law, but no real activity. No penalties on the United End Council resolutions for the United States. That could really happen because Europe needs the U.S. for safety. And that dependence limits how far European governments will go in against what America is doing. The UN, the Secretary General warned that this operation sets a bad example. China spoke up against it. Russia spoke out against it. Iran termed it piracy. But in terms of function, nothing changed. The U.S. can stop things from happening at the Council for Security International. There is no way for legislation to be enforced against big countries. So the criticism is it means something. Power still travels faster than the law, and what other countries are learning. Because if you're strong enough, rules don't hold you back. They do if you don't. That's not a solid base for order in the world, but it's the world we live in. What this implies for the United States money. Now, let's make this real. What does all this signify for folks who live in the United States? The consequences right away are not obvious. Prices for energy haven't gone up. The stock market hasn't gone down. Every day, life goes on. But the costs in the long run are significant. It costs money to run a military mission. Putting aircraft carriers into service and keeping blockades, seizures, and all of that. This needs resources, defense money that could be used for other things. The cost of shipping insurance is going up. When tanker seizures happen all the time, when there are fights between the troops and international waterways, insurance firms hike prices. Those costs get passed on to customers. Unstable energy markets make changeability. Markets that are volatile are also unpredictable. Costs. Prices that change all the time make it for firms to plan, for the economy to work, for customers to run smoothly. And the dollar's power is slowly fading. When a country decides to cut back its reliance on dollar-based systems because they observe how the U.S. uses weapons, those systems' need for funds goes down a little. That drop is slowly, but it matters over time because dollar dominance is what makes it possible the U.S. can borrow money cheaply and run deficiencies that don't have immediate effects and pay for its government at lower interest rates than the economy fundamentals would otherwise let. When that benefit goes away, the cost of running the government goes up, which explains more taxation, fewer social programs, less freedom in the economy, strategic overreach overseas causes money problems at home. It just takes time for the link to become clear. And here's the sad twist. The people who are paying for these surgeries through taxes and higher prices, through less services, are the same people who were told this was about keeping American interests safe. But if American interests are being safeguarded, why is Iran getting anything good? Why are Chinese refiners still buying banned oil? Why are Latin Americans' allies moving away from each other? Why are European partners just offering not very strong support? Those are questions that don't have easy answers. Final decision. Why this mission didn't work. Give what was promised. Let's go ahead and find out what the Venezuela operation did really accomplish. Maduro is in jail. That's true. The government of Caracas is changing. That's also true. But oil still flows only to distinct customers. China still buys, instead only allowed crude from Iran and Venezuela. Iran currently benefits from a bigger market share and money. Russia now sends tankers on their way, which risks of ongoing conflict. Latin America doesn't want to cut back on U.S. diplomatic power in the area. Oil corporations in the U.S. haven't rushed in to fix up the infrastructure. The barricade leaks and tankers get around it, enforcement. The system changed faster than what Washington thought, and that's the main problem. The operation was planned with a 20th century understanding of how money works, how pressure works, cut off a country's access and isolate it, cut off its access and make it comply. But that's not how markets work in the 21st century. That way they worked. They can change. They are all over the world. When you mess up one node, the network goes around it. When you stop working with one provider and buyers find another. When you turn one into a weapon, some people construct a financial system while others do not. Other options. Power took a man away. The market changed the map and the costs of that in terms of strategy. Reward making Iran stronger and breaking it up. Militarizing trade and forming relationships in the region enforcement, which is making the dollar less powerful. Those costs are only starting to add up. This wasn't a tactical failure, feeling the operation worked in terms of the military, but it was a disaster in the long-run sense because the goals controlling oil flows, keeping market power, showing how strong sanctions can be, were not accomplished. And the unintended consequences that help Iran and make people feel bad friends. Speeding up dollarization are exactly what the procedure was supposed to do, was meant to stop the end. This was just the first chapter. Venezuela wasn't the end of the story. It was the start of a new one. A tale about what happens when the world's biggest economy attempts to use force to stay on top in a system that is already changing. A tale about markets that change more quickly than armies can make it happen. A story about allies who don't always agree, no longer automatically line up. A tale about enemies who learn to work together when they are under a lot of stress. The next chapters are already being written. Iran is selling more oil. The energy policy is changing. Sanctions are not working as well as they used to. Not working. The world is losing its economic unipolarity. The United States is making its way through a world where power, military and economic diplomatic, is more disputed than at any point in the last few decades. Venezuela was a test case, and the test shown boundaries, limitations of what punishments can do, what constraints military power can protect, limits of what kind of economic strain can last. Those limitations are important because they set what's doable. And just now, what's possibility is less broad than many people think. Washington wants to admit the operation keeps going. The barrier is still in place. The diplomatic damage is spreading, but the main question is still not answered. If taking away a leader doesn't change the what economic forces gave him power, what did we really do? And most importantly, what happens